Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Today we are going to discuss one of the most important subject and concept, that is GST, Goods and Service Tax. The series we are going to start. Now, the first module, it is Introduction to GST. Before understanding GST, let us understand in basics what is tax, why tax has been collected, and how GST has been formed, and what are the different methods to collect GST, that we are going to understand in today's class. What is tax? Why the government collects the tax? The only person who collects the tax is the government, right? Who have authority to collect the tax is government. So, why they are collecting this tax? Now, have you seen government schools, healthcare centers, government hospitals, infrastructure, that is roads, social welfare, defense, environmental protections? All this will be done. To run this, you need to meet the expenditures, right? Expenditures you have to meet. For that, you need a revenue. You need a revenue. How the government will generate the revenue? See, one of the primary sources of government is tax. It is a revenue to the government. Tax is a compulsory payment. Compulsory payment. If government says pay tax, will you be paying the tax? So it is compulsory payment made by whom? Government. For what purpose? Funding the public services. Funding the public services. And here you need to understand, it is enforced contribution. It is enforced. It is, they asked you to pay, push you to pay the tax, and it is not voluntarily. It is not voluntarily. So why they are collecting the tax? To fulfill the developmental needs through the expenditure, public expenditure, and it is the primary revenue sources for the Indian welfare state. In India, we have three levels of government: union, central, local level government. And taxes has been divided into direct tax, indirect tax, direct tax, and indirect tax. Let us understand what is direct tax and what is indirect tax with comparison. Now, direct tax means directly the person pays the tax to the government. Assessee. Person pays the tax to the government. It is called as the direct tax. And indirect tax, if you see, here the consumer is the final bearer of the tax, right? Final consumer. And he is not paying. Example, you purchased 100 rupees of toothpaste from the shopkeeper. For that, GST you have paid. Now, the shopkeeper collected 100 plus 18% of GST. If you take 118 rupees, 100 rupees he has kept in his pocket and 18 rupees he paid to the government. The final consumer is bearing the tax and he paid tax to the shopkeeper, and the shopkeeper deposited the tax amount to the government. So that is why it is indirect. It is indirect on goods and services. Majorly, if you see, in the direct tax, we have income tax. In indirect tax, we have GST and custom duty. The nature of the direct tax is progressive in nature. What is progressive in nature? Progressive means when your income increases, the tax also increases. Whatever tax amount you are going to pay, that also increases. If you have higher income, you will pay higher tax. But indirect tax is regressive in nature. If I purchase or any businessman purchase, same tax is going to pay. Whatever rate imposed on the goods, same rate for all. Incidence and impact. Incidence and impact means here in the direct tax, if I am paying income tax on my income, see the incidence of tax, the burden of the tax falls on me only, right? But in the indirect tax, it will be shifted. The final consumer bears the tax, incidence of tax. Then tax evasion is possible in the direct tax. In indirect tax, it is difficult and hardly possible. Inflation impact. The direct tax reduces the inflation. Indirect tax promotes the inflation. See, as I already said, the burden you can't shift to the another person. The incidence of tax is on the person who pays the tax only in the direct tax. It cannot be shifted. The burden cannot be shifted. But in the indirect tax, the burden can be shifted. What is the event of tax? Here, income, excuse me, income of the assessee is the event of the tax. But there should be supply. There should be supply. The taxable event called supply should be there, and supply of what? Goods and services should be there. Either goods or services or both should be there. Who imposes and collects? Imposed and collected by the same person only. Imposed and collected by the same person only in the direct tax. But when it comes to indirect tax, it is imposed on the producer or seller. Producer or seller, but collected from whom? From the consumer. From the consumer. Now let us see the background of the GST, indirect tax. See, before independence or after independence, there were no indirect taxes. Yes, it was there. It was there. But indirect taxes system has undergone significant change in the year 2017. In the year 2017. 2017 is a year where numerous amount of indirect taxes have been scrapped. Numerous amount of indirect taxes have been scrapped and altogether replaced this numerous indirect taxes in a single indirect tax that have been brought into picture, that is GST. GST. Before introducing GST, there are numerous indirect taxes, but all have been subsumed or absorbed under GST. Now, what are all those indirect taxes which have been subsumed under GST? Here we have central taxes and state taxes. See, GST replaced the many indirect taxes. The replacement of many indirect taxes is called subsumed. All the indirect taxes are absorbed or subsumed. Now, central excise duty and additional excise duty. Central excise duty and additional excise duty, this is imposed on the manufacturer. Manufacturer. Service tax. Excise duty under Medicinal and Toilet Preparation Act, CVD and Special CVD. Central sales tax, central surcharge and cesses insofar as they related to the supply of goods and services. These are all the central taxes which have been subsumed or absorbed under the GST. Now we have state taxes, state surcharge and cesses, which are related to the supply of goods and services. Entertainment tax. Entertainment tax, this has been subsumed under GST, but except those levied by the local bodies. Local bodies means municipal corporation, panchayats. So whatever they are imposing, it is there, except that the remaining entertainment taxes have been subsumed. Tax on lottery, betting, gambling, entry tax, all forms and purchase tax, VAT, sales tax, luxury tax, taxes on advertisement. These are the state taxes which have been subsumed under the GST. Now, what is GST? Let us understand GST. GST means it is a tax. It is what? Tax. On what? Supply. There should be a taxable event called supply. Supply should be there. Supply of what? Goods and services. GST is imposed only when taxable event called supply, and there should be a goods and services. This is the definition which have been given as per the Indian Constitution. The Indian Constitution says under Article 366, subsection 12, clause A of the Constitution defines GST as goods and service tax means tax on what? Supply of goods or services or both, except taxes on supply of alcoholic liquor for human consumption. The human consumption, whatever the liquor are used, it will be exempted. It is not coming under the GST purview. But if the same alcohol used for medicine or perfume, then it is comes under the GST purview. Now, here let us understand in detail about the GST. The GST we are going to understand with the essential characteristics of GST in India. In India, who bears the final burden of the tax? The final consumer under GST bears taxes. The final consumer bears taxes. GST is a dual GST model. In India, we are using dual GST model. What is dual GST model? Here, where central government and state government collectively will have a right to tax a transaction. Right to tax a transaction. That means they have power to impose the tax. Who have power to impose the tax? Central government and state government. Now, let us understand what is mean by transaction under GST. Transaction. Here, The transactions are classified into two under GST. The transactions are classified into two under GST. What are those transactions? Intra transaction, inter transaction. What is intra transaction? That is location of supply, place of supply, location of supply or place of supply, both are same. Example, here the location of supply is Karnataka and the place of supply is also Karnataka, or it is between a same in the same UTs or same state. Same state. Then how the GST will be collected? Here CGST equal amount of SGST or UTGST will be collected. SGST or UTGST will be collected. Let us understand with this a small example. Now I have a supply of 1 lakh rupees and 18% of GST. So the 18% divided equally, 9% of 1 lakh is 9,000 goes to central government and remaining 9% goes to SGST or UTGST. Here the GST component will be taken by the respective state government. Respective state government. This is about the interstate transaction. Interstate transaction. What is interstate transaction? Here, location of supply, place of supply will be same. Example, in Karnataka only, inside the Karnataka only. Location of supply is also Karnataka. Place of supply is also in Karnataka only. Then CGST will be collected an equal amount of SGST, or it is taken place in UT, then UTGST will be collected. That is 1 lakh into 9% is 9,000. Again 1 lakh into 9% is 9,000. Equally distributed, and it will be collected by the respective state government. Respective state government. What is interstate transaction? Here, interstate transaction, the location of supply, place of supply, the location of supply, place of supply can take place in four forms. What are those? It can be between two states. It can be between two states. It can be between two union territories. Two union territories, or it can be between one state and one UT. One state or one UT, or it can be between different countries. Different countries. Different countries. Now, example we'll take. The location of supply is Karnataka. The place of supply is Andhra Pradesh. The place of supply is Andhra Pradesh. Now, how they will collect GST? Then, IGST will be collected. What is IGST? IGST is a sum of CGST and SGST. SGST. It is the collective rate of CGST and SGST. What is IGST? IGST is the collective rate of CGST and SGST. Collective rate. Rate. Now, this IGST will be collected by the central government. This IGST will be collected by whom? Central government. What the central government will do? The central government will keep 50% of the tax. Whatever they have paid, the 50% will be retained with the central government. The remaining 50% will be transferred to the or remitted to the where the place of supply has been taken place. It is Andhra Pradesh. That is why the another characteristic of the GST is it is a destination based tax. It is a destination based tax. It is not origin based, it is a destination based tax. So, what is my destination here? Place of supply. It is remitted to the place of supply. That is Andhra Pradesh, 50%. And every transaction, by this we can understand that every transaction with chain, there is a chain in ending point. Ending point. In case of UT, it has been taken place between the one state and UT or between two UTs, then the whole amount will be owed by the central government only. Central government only, because who gives amount to the UTs? The central government. So it maintains the separate account. The administration of UTs are taken place by the central government. They will create a UT account and it will be transferred to that account and used to the respective UT only. Okay. This is about the destination based tax and dual GST model. Let us understand GST is also a value added tax. Value added tax. What is value added tax? Now, we are going to understand. See, what is UT? UT means who have own legislature equal to the states. And here one more thing you have to know that we have how many states? 28 states. But for the GST, we are adding, totally we have 8 UTs. In that 8 UTs, 3 UTs we are going to add to the state. Okay. So total 31 states. 31 states for the GST purpose and 5 union territories. Now let us understand how it is a value added tax and how the final consumer will bear the tax. Now, manufacturer. Manufacturer is there. He manufactured a product. The product value was, he manufactured a product. The product value was 1 lakh. 1 lakh. Here I am taking example of 10%. There is no 10% in GST. For simplification of the calculation, I am going to take the 10%. GST is 10% on this. This is 10,000. Total how much? 1 lakh 10,000. 1 lakh 10,000. Now the manufacturer sell this product to the wholesaler. Sell this product to the wholesaler. What was the product value? Here you should not take the 1 lakh 10,000. You are taking only the value of the product. That is 1 lakh, 1 lakh, right? 1 lakh. Now, how much the wholesaler is paying to the manufacturer? 1 lakh 10,000. 1 lakh 10,000 he paid. 1 lakh 10,000 he paid and 1 lakh he kept and 10,000 he paid to the government. 10,000 he paid to the government. Now, the wholesaler will sell this to the retailer. Is it selling it for only 1 lakh? No, you will add profit margin. Profit margin of 20%. 20%. On 1 lakh, 20% means 20,000. 1 lakh plus 20,000 is 1 lakh 20,000. On this GST. GST is 10%. 1 lakh into 10, 1 lakh 20,000 into 10% is 12,000. 1 lakh 20,000 plus 12,000 is 10% is 12,000, that is 1 lakh 32,000. 1 lakh 32,000. Now, the wholesaler sells this to the retailer. How much the retailer is paying? 1 lakh 32,000 is paying. 1 lakh 32,000 is paying. Now, here you need to understand, the wholesaler said to the government, sir, you have said the final consumer is the bearer of the tax. I paid already 10,000. Again I have to pay. I am not the final consumer, he asked. The government said, boss, please don't worry. What I will do, I will create an ITC for you. Input tax credit ITC for you. The 12,000 is, what is 12,000? 12,000 is output tax liability. Output tax liability. You have already paid 10,000. I will create a wallet for you. How you will top up your wallet? No, like that it will be topped up whenever you paid 10,000. It will be there minus your output tax liability from it, 12,000. What is the remaining balance you pay to the government? 2,000 he paid to the government. 2,000 he paid to the government. Now, the retailer. Here value added cost becomes 1 lakh 20,000 because he added profit margin. 1 lakh 20,000. 1 lakh 20,000. Again he will add his profit margin. Profit margin is 20%. 24,000. The total becomes 1 lakh 44,000. On 1 lakh 44,000 GST will be 14,400. The total is 1 lakh 58,400. The retailer is selling it to the final consumer. Final consumer 1 lakh 58,400. 1 lakh 58,400 is paying. Now 1 lakh 58,400 whole amount he paid. The retailer said, boss, I am now also not a final consumer. What I have to do? The same thing government repeated to the retailer also. I will create an wallet for you, that is called ITC. 14,400 will be, what is the amount he paid? 12,000 he paid. 12,000 will be in the your input tax credit. What is your output tax liability? 14,400. You minus 14,400. What is the remaining balance? 2,400 pay the tax to the government. To the government. But final consumer has to bear full tax. How much he will pay tax? See, let us see why GST is considered as a value added tax. Now, the manufacturer paid how much? 10,000. The wholesaler paid how much to the government? 2,000. The retailer paid how much? 2,400. What was your total tax? 14,400. See, whatever you have value added, finally how much tax has come? the same amount you got. If you add all the tax, whatever you paid to the government, if you see, if value added tax, whatever value added there, if you take, see how much here you value added, 20,000. On 20,000, 10%, if you calculate how much tax is coming, 2,000. How much here he added, 24,000 value added. On 24,000, 10%, if you calculate, you will get 2,400. Is it not a value based tax? Value added tax. Now, just we will see if value not added. Example we are seeing. 1,20,000. He has not got any profit margin. So same 1,20,000. On 1,20,000, what is the amount he is going to pay tax? 10% of GST, it will come 12,000. 1,32,000. Now, how much is input tax credit? 12,000. How much he paid? 12,000 is received output tax liability. Then it is nil. It is nil. If you have value added, then only the tax is coming on the value which have been you added. 12,000 nil. Nothing you need to pay to the government. Is it clear? The characteristics of GST, this is most important. If you understand this basic concept, then complete GST you are going to understand. This is beauty of this chapter. It is paid by whom? Final consumer. It is dual GST model because why? We will collect CGST, SGST. Both the governments have a right to impose the tax. It is a destination based tax and it is a value added tax. Is it clear? Yes. Let us understand the concept. Value added tax, continuous tax credit it will provide. You can claim the credit. Final consumer pays the tax and there is no cascading of tax. Tax on tax is not there. Whatever value you have added, on that only tax you are paying extra, not tax on tax. Why we need? Let us understand need for the GST in India. See, because of deficiencies, weaknesses, problem, complex, multiple taxations laws, to overcome all these existing problems, indirect tax regime has been introduced. See, already we had many problems. To overcome that, GST has been introduced already 8 years over. But still, you have to know what were the major problems we were facing the before. For that, we are understanding this need for GST in India. You all know pre-packaged software, like example pen drive, CDs and all, right? See, there were VAT will be collected on that, and services whatever you will upload into it, for that services taxes will be calculated. The central government used to calculate excise duty, and state government will be calculated VAT. See, double taxation system was there. Cascading of tax. Cascading of tax means tax on tax. Tax on tax. Now, the assemble value of the goods under is 1,000. 1,000. On this, excise duty will be calculated at 12.5%. So 1,000 plus 125 becomes 1,125. Now, on this, VAT will be calculated. See, you are supposed to calculate on the assemble value, but here on the total value, after adding the excise duty tax amount, you are calculating on this VAT. This is called cascading, tax on tax. This was increasing the final value to the consumer, higher cost. And you cannot set off against each other. SENVAT and VAT, you cannot set off each other. Several state level taxes were there that are not subsumed into VAT. State level VAT on goods was not integrated with the taxes on services. The service industry was one of the booming industry, but the previously states were not allowed to collect a service tax on some of these services. Exclusion of services. CST caused the distortion. See, these are the main reasons GST has been introduced to remove the cascading of tax, avoid double taxation, ensure a seamless flow of input tax credit, and to create a unified national level market. Now, what are, what are the legislative framework? See, we have separate act. We have CGST Act imposed under CGST, IGST Act, SGST Act for of the respective states, UTGST Act. Here you can see the meaning of India. What is the meaning of India under the GST? See, GST, the India means Territory of India as referred to an Article 1 of the Constitution. Article 1 of the Constitution. The territorial water also included from the Castle line. From the Castle line, if you go to 12 nautical miles, 12 nautical miles under the seabed and subsoil. Here, 200 nautical miles, exclusive economic zone. It is called as exclusive economic zone. Why this also considered? This is because we are considering it as oil explorations takes place here. So that is why this also considered under the GST. And with Sri Lanka, we have maritime zone. Maritime zone means Sri Lanka, we have 18 nautical miles. It has been divided 9 nautical miles to India, 9 nautical miles to Sri Lanka. Central Government and Service Tax Act, state level law, state legislature. We have Delhi, Puducherry, Jammu Kashmir also included in this. This comes under UT, but for the GST, we are considering this also as a state only. Integrated Goods and Service Tax Act 2017. This extends to whole India for interstate supply. Union Territories of Goods and Service Tax Act 2017 extends to all UTs without legislature. It is Andaman and Nicobar Island, Lakshadweep, Dadar, Nagar Haveli and Daman Diu, Ladakh, Chandigarh, other territories. And these laws together constitute the foundation of the GST regime. And this ensures uniformity, seamless taxation, and common national market across the India. Across the India. So dual GST model, already I have explained what is dual GST model. We have CGST, SGST, and UTGST that we have understood. Special treatment of certain products. See, alcoholic liquor for human consumption, this is outside the realm of GST, and other taxes, whatever it is levied on alcohol is tax excise duty, and CST VAT or inter or intrastate sales. Petroleum, crude diesel, petrol, ATF, and natural gases. Presently, it is leviable, and future date. On the future date, it will be notified by the GST Council. Excise duty will be calculated on this. Tobacco, GST will be leviable, and central excise duty also, because these are all harmful products. That is why double taxation has been imposed. Opium, Indian hemp, other narcotic and drugs and narcotics, GST leviable on them, and state excise duty also will be levied. Under the alcoholic liquor, other two products also we have which have been not coming under the GST, that is under nurtured neutral alcohol and rectified spirit. It is also outside of the GST preview. ATF means aviation turbine fuel. And these products either kept outside the GST or subjected to special tax treatment due to their unique nature, revenue consideration, and existing taxation framework. GST Common Portal. GST Common Portal is, see, what is GSTN? See, the portal www.gst.government.in. See, this GST portal, it is controlled by the GSTN, GST network, managed and controlled by the Goods and Service Tax Network. See what they were doing, they were connecting like fintech companies, some of the fintech companies, GSPs. They will provide tools to the big companies and advanced tools, helping them in filing the returns and handling their compliances. So, the main purpose of introducing this GST common portal is establishes uniform interface for taxpayer. It provides common and shared IT infrastructure between the center and state. This facilitates the registration, forward return to the central and state, compute and settles the IGST, facilitates the payment with banking network. Electronic Way Bill Portal. This is managed by the National Informatics Center, Ministry of Electronics and IT. The main purpose of this is to furnishing the electronic way bills. Invoice Registration Portal managed by NIC, Ministry of Electronic and IT. The main purpose is uploading reports of invoices notified persons. GSP and ASPs. GSP and ASPs. GSPs act as a connection between the taxpayer and GST network. GST network. See, GSTN appoints selected ITs and fintech firms as create the GSP for creating the application for the taxpayer, interacts with the GSTN, and GSP offers these below services: return filing, reconciliation of purchase registered data, and auto populated data, dashboard of monitoring GST compliances, role based access for managing GST tasks, that is, uploading invoice, filing return, application for the tax professionals, managing clients, integration of accounting packages, ERPs with the GST system. And they provide optional channel for the taxpayer to the perform GST related function. See, the application service provider. GSP collaborated with the ASP, who act as a intermediary between the taxpayer and the GSP. Now taxpayer uses ASP. ASP provides service applications and ASP connects it to the GSP. Whatever data services given by the GSP integrates with the GSTN, Goods and Service Tax Network. GSP develops and operates the applications to interact with the GSTN, and while ASP act as an intermediate to deliver the solution to the taxpayer through the GSP. What are the benefits of GST? Benefits to the economy. It is a unified national market. Unified national market means uniformity in the tax rate and procedures. Boost the Make in India. Boost the investment and employment. Simplified tax structure. Ease of doing business. Certainty in tax administration. Related to the registration refund. Ease of tax compliances. Automated procedure with the IT. Easier tax compliances compared to before. Advantages for trade and industry: lower the tax burden, mitigation of cascading of taxes. GST provides unified, transparent, efficient, and growth oriented tax system for the benefit of the economy, industry, and taxpayers. The constitutional provisions of the GST. Here, just go through the article 265, 245, 246. Here, the main article. Here you can see list 1 union list, list 2 state list, list 3 concurrent list. Article 366, this is the definition given on the GST. So what is GST meaning? Any tax on supply of goods and services both except the supply of alcoholic liquor for human consumption. Then Article 279A, it is about the GST Council. Empowers the President to the Constitution, a joint forum of central and state, namely called as GST Council. What this GST Council consists? Union Finance Minister as a chairperson, Union Minister of State in charge, a revenue or a finance in member, Ministry in charge of finance, taxation, any other minister nominated by the central government. Each state government nominates one member. GST Council make the recommendation related to tax, cess, and surcharge levied on CG and SG. Local bodies subsumed into GST. Goods and services subjected to the or exempted from the GST. Model of GST law. Principles of levy, appointment in course of interstate trade, and principles that govern by the place of supply, turnover limit below which GST is exempted, tax rate including floor rate with bands of GST, any special rates, specified period, special provisions related to Arunachal Pradesh, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh, and Uttarakhand, special categories state, any other matter related to this GST as the council they may decide. And GST council develop the harmonized national market for the goods and services. Quorum, one half of the total number of members. Decision of GST Council will be taken at the meeting by majority of not less than the three-fourth of the weighted votes. Member which are presented in voting as per the below weights. Vote of central government, one-third of total votes cast. Votes of state government, two-third of total votes. I hope all of you understood the introduction to GST. Thank you for watching. Have a great day.